Hey Investy Besties, welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. I'm not a financial advisor, but I am really open with our investment accounts. Go back through the many videos and the playlist that I have. You'll be able to see all the details. And again, it's just documenting my husband and I's journey to financial freedom, financial independence, and really just being able to do the things that we want to do. We did not start at 20 years old. We started at 30 and just really started to build up from there. I'm 38 and I'm just really learning. Okay, you got to make the time. You got to make the effort to educate yourself. I have 3 children, one who has special needs. Do you know a lot of times when I make these videos, I do it at 5 o'clock in the morning. Do you know when I'm researching and studying stocks, it's at 6 o'clock sometimes. Sometimes I have to stay up later at night to find the time to do it. Do you know that if I'm doing laundry or washing the dishes or cooking dinner, I have a audio book playing. I'll have an interview by Warren Buffett playing. I'll have a YouTube video that's really teaching me about, a specific sector or a specific stock or investment playing. So it's really important to use the time that we have, because this is a question that I got, like, how do you find the time? You got to use your time almost like twofold. If you are driving in the car, that's a great time to turn on a podcast, right? Because you're just in the car. We could use that time wisely. If you have children and you're cleaning up, many a time I turned on the TV, turned on the laptop, and just had something playing, because I can listen real well and I can visualize the information that people are talking about. I can make the time to read a book at night or get up in the morning to do it. So, and my husband too. So it's important to really find the time to do this so that you can get ahead, right? Tax time is here. Many of us are getting refunds back. That's a great catalyst to get you forward. So instead of spending it on vacation, yes, you can enjoy, your life here and now. But if you plan on being alive in the future and you see the prices of things going up, you see the red flags, it's your responsibility to kind of do what you can to get you ahead. And that's why I'm here to help you to do that, to motivate you, to provide you with the consistency that you may need, the accountability that you may need. Because one thing your sis is consistent. That's a habit that I have developed that I really cannot live my life without, is being consistent. And it's a stress reliever. It makes my life run easier. And I think it's motivating to you too. To all of you, when you see the videos and you're able to go back to your own finances, your own investments, and kind of stay on top of this. So I just wanted to just give the little motivating tidbit before I got into the video, because you saw the thumbnail. I'm going to share with you 2 dividend stocks that we own that are down. And I want to do this, and I said I was going to do this because remember, our theme this year is building confidence. We went through 2020 with the stock market down. I mean, it didn't matter what you were invested in. It could have been index funds, which are safe. It could have been dividend companies, value companies, growth. I mean, whatever it was, everything was down. Crypto got hit with a baseball bat, or at least our crypto did. Everything was down. But as a beginner, if you see that and you're getting scared and fearful, building your confidence. And I'm going to help you do that through our journey. So, sometimes your dividend stocks, even though they may pay, are down, right? Sometimes your growth stocks, sometimes the funds you're in are just down because, again, some go up, some go down. There's hills and valleys when it comes to investing. And if you believe in what you're investing in long term, red is a good thing in a sense, because when you're ready to buy more, you're getting it on sale. So I want to share with you, yes, we have dividend stocks that are down. These are not dividend stocks we would sell. Now, we don't fall in love with any company, but these are not dividend stocks we would sell. It's just they're down. And I want you to see that not everything is up. It's not always peachy. It's not always, glittery and shiny. Sometimes you got to tell yourself, I'm in this for the long haul. Okay. So we're going to go to Verizon. Verizon is the stock that we're down the most in all of our accounts, not just here in Robinhood. And you see it up on your screen. I'm looking down at my notes, but it's down the most in all of our accounts. Verizon has been really having a tough time, but I do believe in the company long term. And this is the thing. Sometimes companies will have low moments. Sometimes management has issues. Sometimes it's the services that's having issues. But if you believe in them long term, then, you know, you just buy and hold. And so Verizon right now, well, the current share price at the current recording, again, the market is open, so this number can go up or down, is $41.52. Now let's look at our position in this, okay? So our market value, or how much our shares are worth, again, the market is open, so this number may go up and down. It's $1,478.96. That is on 35.62 shares, okay? So our short-term goal was 50 shares for Verizon and then just stop and move on to another stock to invest in. But we are down. Look at this. Our total return in Verizon, we are down $392.43, or we're down 21%. Let's not even do the 20.9, 21%. Okay, let's round up. We're down 21% in this position. Yes, that's a lot of money to be down in. I mean, almost $400 is nothing to me anyway to scoff at. And so, yes, we get dividends. If I pull up the dividends, I'm just looking at my notes. You will see it up on yours. Our last dividend was on February 1st. It was for $22.89. So we do get our dividends reinvested back into Verizon. So at least we can buy some more at a lower share price. But long term, definitely Verizon. I like the fact that, you know, Verizon is trying to push forward with their fiber optic network and the 5G wireless and all that. There's still some kinks that they're trying to work out, but long term, I do believe in Verizon. They've been around for a long time. We have Verizon in our house. So, you know, we're just going to keep on keeping on with it. And like I said, once we get to 50 shares, pause it. That's our share size, like cap, and then move on to something else. That's why I'm a big fan of creating share sizes for yourself. So you're not just investing and you have no strategy with it. Like, okay, you're investing here. What's your goal? Do you want to cap it? Do you want to adjust the goal? Maybe move it higher? You know, something along those lines. Okay. Verizon's balance sheet, you know, is a little, you know, iffy. You know, they got a lot of debt. And so again, like I said, I'm watching, but long term, we do believe in them. Next that we're down in is Bank of America. You see it up on your screen. Bank of America has been having some issues with, I know there was a controversy with the checking accounts and Zelle. So people, their money was like missing from their checking account. It was really crazy. Bank of America said that was an issue. And this is the thing, like when you're investing with banks, and not just banks, because Target, Home Depot, they'll have like issues where people will hack into their people accounts or their customers' accounts and take their money or steal their information. So I try to stay close to the ground when it comes to news like this. Long term, I like Bank of America. Most people in this country have an account with them. But when things like this happens, I'm looking for management to make a statement saying what you're going to do to remedy the problem, be sorry about it, and move, you know, like move forward with it. And so as of now, we're still going to hold Bank of America. Our market value, or how much our shares are worth, it's about $1,008.20. Again, the market's up and down by the time you see this video. And our total return, we're down 11.5%. We're down in this position, or about $131, give or take a couple of cents. We're down. So again, do we believe in Bank of America long term? Yes. So you know, you just got to work through the kinks. So we currently have 27.70 shares in Bank of America, and our last dividend payment, I'm showing you guys, you see it up on your screen, was on December 30th, and that was for $6.60. Not 60 cents, $6.06. And our goal cap for this is 50 shares as well. And since we're almost at 30, so, you know, slowly chugging along with this, but I do think that we could achieve this. I think this year, if not this year, next year. We have other like bigger stocks and positions we're focused on, but we're still going to put money into Bank of America, just not getting like the bulk of our attention. I also wanted to share with you Disney, because we're down in Disney as well. So for Disney, we're down, and I have my notes here. So we have about 30 shares of Disney stock, and the goal was to really give this to our children. Our ideal goal is to give them about 25 shares each. So that means 75 shares. So we got a ways to go, but we're not in a hurry to build this up, but we're down in this position. Now, Disney did pay a dividend. They paused their dividend when the pandemic started, because again, if you look at Disney's like business structure, everything that Disney had going for it, the parks, the cruise lines, the movie theaters, making the actual movies was all shut down. Like literally everything that Disney had its hands in was shut down because remember with the pandemic, we couldn't even be in close quarters. In the parks, you're in close quarters. The cruise ships, you're in close quarters. The movie theaters, you're in close quarters. Or if you're making movies, you're in close quarters. So, you know, I believe in Disney long term. Again, when you believe in a company long term, even if they're going through like hiccups, you know, I still, again, not financial advice, but my husband and I still invest in them. I know they also had issues with their CEO. So this is why it's important. When I always say management counts, why you should check in. That's why I do the portfolio check-ins, because it forces me to look up these companies. Was there any news released? I am a big fan of this app. It's called Stock Events. They have a free version. I use them to research stock analysis. I've talked about them on this channel before. A great opportunity just to check in, just to see how the company is doing, because if they switch CEOs, then the company can go off the rails. Well, Disney hired Bob Chapek. I think he was the CEO. He was horrible for the company. I mean, increased costs, the guests weren't happy. It just, Disney did not perform well under his leadership. So the board of directors brought back Robert Iger, or Bob Iger, who was really great for the company, but he's only going to be back for 2 years. So my hope is that he's training his successor, because again, leadership matters in companies. Elon Musk proved that. You need to know who the leadership is, because they can have a direct impact on the stock. This is why also I love funds like ETFs and index funds, because you don't really have to worry too much about it. But keep in mind, Disney is in a lot of these funds, so it's important just to stay on top of what you are invested in. But like I said, we have 30 shares. Our value is about $3,350, and we're down. Again, we're down in this position $240. We're down. So again, I wanted to make this video to show you guys not everything is up. You know, even when that's why I love dividend investing so much, because all last year, when the market was red, we still were able to make about almost $8,500 in dividends. It was like $8,400 and some odd dollars. So that's why I'm saying $8,500 in dividends last year. And the whole year, the market was down. So now I see that if I park our money into good companies and funds, even if the company is tanking, even if the company is going through some management problems, long term, and though Disney paused theirs, they have been talking about on their earnings call about bringing it back. Disney has been doing, like when they started opening during the pandemic and when the restrictions were easing, and then I know President Biden is going to be lifting the emergency mandates from the pandemic, so it's going to like open up more opportunity for Disney, and I think a lot of the other traveling type of companies, because now people are going to be just kind of going back to normal again, or getting used to the new normal, right? And so as investors, the stock market, you know, we look ahead, right? We don't look at now, we look ahead. And so, yeah, I wanted to just share this video. I hope that you guys were motivated by it, so that you saw some of our real positions, like, wow, they're down. And even last year when I was sharing the portfolio updates, we were down $10,000, $20,000 in 1 month. The positions just kept falling. The 401k, the Roth, the HSA, everything was down. So yeah, we're just going to keep on keeping on. And again, not financial advice, but if you believe in whatever it is you're investing in, long term is key. That's what I'm trying to instill in a lot of you. So again, please leave me a comment down below. Don't forget to like this video, share, so we can grow. We're almost at 11,000 investy. So thank you so much. Follow me over on Instagram. Information is down below. If you need any help, any trackers, spreadsheets, private groups, open up an account, all of my links, referral links, all of it is all in my description box below. So again, thank you so much. And until next time, I'll see y'all in the next one. Bye-bye.